Hi there, I'm Sharad. Every week we analyze the stocks, run a few algorithms, and identify stocks for the trading and share that on YouTube. I'm supported by Aman, and this is the summary of this week, what happened in the last week of May, which is also the week just before the election results. So it's a very interesting week, and the week ahead is going to be even more interesting. So let's see what happened during the week, and then we'll call out the stocks that we are betting upon during this week. And at the same time, this is not a recommendation or an advice. This is just that whatever we invest or whatever we identify, we share it. Up to you to decide whether you invest or trade in this, just for education. So the first and foremost being that Nifty was down by 1.86%, and it closed very close to 22,500 mark, to be precise, at 22,530. So a week, I won't say dominated by beers, but definitely jitters, and especially on the mid cap part of it, also were expected there in some segments wherever there is froth. So it mid cap was down by 1.49% to close at 14,443. The saga continues. FI has been every week, month on month, have been pulling out money from Indian market. So this week wasn't any different, and there was net outflow of 7,754 crores from the equity market, and DI is bought for 14,935. So over the year, this has been the primary pattern that FIs have sold and DIs have bought, and this time the ratio is pretty much in 1:2. So definitely, the money in Indian market is coming mostly from India now. Sectors which were in focus, IT had a major meltdown of 4.25%, energy down by 3.3%, FMCG down by 2.42. Nifty Bank stayed almost flat to close in 0.03%. So these are primary numbers and fundamentals, I would say, or what the story is reflecting in numbers. And every week as we go through this cycle, and if you're saying that we're going to trade in short term, what's very important is to consider sentiments, and we ride on the sentiments, but at the same time, in the stock market, one needs to keep their own sentiments in check. And that's why we pull uh, quotes from some famous investors, and many a times it happens to be Warren Buffett. This time it's again from him, but it's more about investment rather than trading. And whatever we trade in is also investment worthy. Of course, not at the level at which the really seasoned investors do, because they have a very consolidated portfolio, whereas we have a set of 100 stocks which have been growing uh, a quarter on quarter, and that's the basis we pick them for trading. But over here, the quote from Warren Buffett indicates: should you find yourself in a chronically leaking boat, energy devoted to changing vessels like to be more productive than energy devoted to patching leaks. So what he intends to say is that if you have found yourself in a set of stocks or a stock which is not doing so well. So rather than trying to average out or do some kind of patchwork, either at the industry level or at the level of a stock, you should shift from that particular stock into something else, because the energy that would be required to track it down, get the averaging correct, and then wait for it to go back would be better that you book your loss, move to the right stock, and stay invested in the right places. That's primarily what we are inferring out of it, but you're free to make your inferences. The primary being the fact that it's better to, identify the right stock and ride on that rather than just trying to figure out on how to make the most of where you are investing. So now, coming back to the markets, as we know that the markets fell by 1.89%. What was the trigger during this downfall? Primarily, first one being the uncertainty over the elections. But now, as we are recording this, the exit polls are out, and there's a lot of euphoria in the market. But definitely, the last week, the crash to a certain extent was because of the anxiety from the Lok Sabha election. The second part of the fact being that the US Treasury yields have increased, which means that The money can be invested over there with much more confidence and with much more rigor. That is why there can be an outflow over here. And the primary reason which is driving the US trade yields is the commentary from the US Fed and the consumer data, which led to a 1 month high. The third part being the fact that the tension in the Middle East, and because of the tension in the Middle East, the entire stock markets across the globe have been trading slightly on the lower side. Uh, and also because of that, there is a surge in the oil prices and a higher bond yield, which results in the equity markets taking it negatively and having a downturn. And the fact that the crude oil prices are increasing and there is rising tension, there is a dent to the US Fed rate cut, because of which, again, the markets, as they are expecting that thing to happen soon, thereby enabling easier access to the capital. And if that is not happening, the markets have turned slightly negative. However, at least over the weekend, as we're recording this, the exit poll numbers are there. The GDP results are awesome. So definitely the upcoming week would be euphoric, and the market can go all the way to 22,800 at a conservative level, and it might touch 23,000 plus also. We'll test the waters, and definitely if BJP comes back to the power and with a reasonably good majority, which is 300 plus for us, then the market is definitely going to celebrate it by sailing about 23,200. So that is how the week was, and that's what we are anticipating in the upcoming week. Now, from fundamentals perspective, what we also analyze as are the results, and we pick up some of the key companies to understand the trends and we reflect. The first one being the for this week being the IRCTC, the revenue was up by 18.23% and net profit up by 2.01%. IRCTC was the darling stocks for 2021 and 22 when it really, really boomed and went up and people made a lot of money. But this time, it's not that much as other PSUs are celebrating because the stock has had a stupendous run and the valuations are significantly high. The catering business showed promise with a 34% year-on-year growth, but it will remain limited. And the net profits fell short of analyst estimates due to operating margin shrinking. So mostly we don't see a very good opportunity, but if you are a long-term investor and you believe in the story of IRCTC, then at every dip you can invest a little bit. But from a long-term perspective, we don't have long positions definitely on this particular stock. We did make money at the time of when the boom was there. At this point in time, we find the valuations to be very expensive. The second stock that for which the results were out and we analyzed was Tata Steel, which was the revenue down by 6% and net profit down by 64.5%. And the final dividend of 3.6 rupees announced. Primarily, you know, if you look at the domestic demand, it is going up and it went up by 9% year on year. But because the primary down trend in both in the revenue and net profit is because of the steel prices coming down and the weaker demand in Europe. That has led to the uh, primarily the muted results that this time, and the markets reacted very negatively to this particular result. It went down by 6%, but we see it as an opportunity to actually invest in this stock. I think from a metals perspective, this is definitely one of the stocks to have in your portfolio, and every dip is a opportunity to buy this stock from a long-term perspective. So Tata Steel is there on our list, and we will be investing from a long-term perspective. Now, coming to the last part of this presentation, what we do is, as I mentioned, on a daily basis, on a weekly basis, we run an algorithm which checks for a few things, whether the stock is taking support at higher levels, both in terms of creating highs as well as support at higher lows. Then identifying whether the volumes are good on the days when the stock went up, if the trends are positive at a EML level. And this is based upon 150 stocks which are fundamentally strong. And based on that, these are the stocks that came into our list. In fact, we got 10 or 11 for this week, but the ones that we are recommending are PHC, which is Power Finance Corporation, and it's trading around 510 rupees with a PE of 8.24 with very good results in the last quarter. CI India, which is a uh, in the switchgear industry, the price is around 535 and the PE is 22.37. Finolex Cable, this has been on our list. Even 3 weeks back, we had recommended it, and we still continue to hold recommendations because it had a stellar result. And definitely in the cables business, this is one of the relatively safer bets to have at this point in time because it's trading at 33.8, which is reasonable. And the last one being the IIFL Securities at 195 with a PE of 11.25. There is a uh, spelling issue over there, or the numbers are not having the decimal at the right place. So these are the stocks we are taking a bet on during this week, but this is going to be a very interesting week, and probably it can be a very volatile week also because the exit poll results are out there. We're recording this on 2nd of May. 3rd of May is the only day when the market operates based on exit polls and the euphoria that is there. 4th May, again, the results come out. If the results are aligned, then the markets will continue the momentum. But in case the results show little bit shakiness, then definitely market is going to have a negative reaction. So stay invested, trade, but trade within your risk management capacities, and whatever gives you a sound sleep over the night is the right trade and the right investment. Ultimately, you are trading and investing to get a sound sleep. If you get that after taking a trade or investment, do that. I'll see you in the next week in which we cover what happened in the election week and we come up with the next set of recommendations, and we'll talk about how these investments performed during this week. Bye for now.